Welcome, ladies and gentlemen, to FNA's CBDC Broadcast, our monthly webinar covering the latest CBDC news, topics, and key developments. My name is Will Towning, and it is my pleasure to be your host throughout this series. So it goes without saying that we're all interested in CBDCs here, and if not, then perhaps we're in the wrong place. But it's a pretty big deal at FNA too. Our CBDC broadcast hopes to provide an interesting roundup of the latest news and developments, followed by a monthly topical deep dive into specific topics related to CBDCs. Last month, I was joined by FNA's founder and CEO, Dr. Kimmo Soramäki, and Carlos Leon, FNA's Director of Advanced Analytics and Simulation. They discussed in detail the benefits of CBDC simulation as authorities and commercial banks prepare for the impending reforms. This month, I'll be joined by two fantastic guests, Jean-Michel Godeffroy, President of JMG Consulting and former Director General at the ECB, as well as Keith Baer, Fellow at the Cambridge Centre for Alternative Finance. Now, before I hand over to Kimmo, who will do some introductions of our guests, I have two items on my agenda. The first one is a housekeeping announcement. Please leave your questions in the Q&A function at the bottom right-hand side of your screen. And we're going to try and answer them all in one go at the end of the session. We were inundated with questions last time, which was great to see, but they were coming from all different directions. So if you can please use the Q&A function and not the chat function, that would be very much appreciated. And then secondly, the session will be recorded the same as last time, and you'll receive this along with the slide materials at some point tomorrow. The second item on my agenda is a quick roundup of what I hope will be some interesting CBDC developments in the news. So last month, the Fed popped the bubble of suspense with the release of its long-awaited report on the potential for a digital dollar. In typical Fed style, though, the suspense is not all disappeared. The report remains neutral as it sort of discusses the benefits and risks associated with a US CBDC. This is the first public discussion on CBDC by the Federal Reserve, and given the Fed and the dollar's important role in the global economy, it's a pretty major step too. So it was exciting to read about the insights. Just weeks before, the Boston Fed and the MIT released the results of a successful CBDC trial, which in summary indicated the US dollar is possible, both from a sort of a technology and real-time transaction perspective. The next steps to sort of look out for with this development is the Fed is collecting feedback on 22 items outlined in the report. So stay tuned. I'm sure we'll be covering this again in the coming months. HSBC and IBM have recently tested CBDC interoperability, which to me feels like one of the most talked about topics at the moment concerning CBDCs. The initiative was the latest innovation resulting from experiments led by the Banque de France. This is a bit of a tongue teaser, so let me get this right. The initiative was initiated by the Banque de France, conducted by HSBC, using IBM and R3 DLT technology, as well as both public and private clouds, and an IBM interoperability tool. So if nothing else, this was a triumph of collaboration, which we all know is nothing to take lightly. But the trial tested the transactional life cycle of CBDCs, e-bonds, foreign exchange, and it demonstrated how these new technologies can save time, reduce market risk, and improve the security of transactions between central banks and between commercial banks. In fact, I'm pleased to announce that in our March CBDC broadcast, we'll be joined by Mark Williamson, Managing Director of HSBC, and Soren Mortensen, Director General of Financial Markets at IBM. who will be discussing the recent project between the two firms. So I'm looking forward to that one too. And then finally, the IMF released a report on the lessons learned from early CBDC issues. The report, which was released earlier this month, shines a spotlight on the decisions made by the central banks of the Bahamas, Eastern Caribbean, Uruguay, Sweden, Canada, and China. Skipped a slide there. In the interest of time, I'd like to just highlight two interesting debates I picked up from the report. The first relates to the sustainability of CBDC business models. So this is a complex issue, both for the private sector with sort of profit incentives to consider, and then for central banks with the cost recovery implications. And there are basically three options. There's charging fees to consumers, which conflicts with sort of other policy objectives, such as CBDCs are a public good and the ambitions for low cost payments. Charging fees to merchants is a second option, which risks disincentivizing engagement, or the cost could be passed on to consumers. And the third option is to subsidize CBDCs. In the report, the IMF finds that most central banks say this is simply not a viable option. So there's lots to unpack there, and I'd encourage you all to sort of take a further look following the session or in your own time. And the second interesting point I'd like to highlight concerns the choices about, or how to make choices about the deployment technology in this sort of rapidly changing world. As technology is still developing, choosing the right technology, not just for today, but for tomorrow, is a major challenge, and something that many central banks are thinking about. And again, there's lots to unpack here, and some interesting insights on the sort of the specific central bank concerns in this area. And I've included here a slide with several other CBDC related topics that were in the news recently, but unfortunately we don't have time to cover them today. So I'll leave this with you, and you can have a look tomorrow once we share the slide materials and the links. But with all that said, it's now time to pass over to Dr. Kimo Soramaki for some introductions of today's guests. So over to you, Kimo.
Thanks a lot. Maybe just go to the next slide. I'm the founder and CEO of FNA, and for those who don't know what FNA does, we are developing software technology for understanding the interconnected nature of financial systems. That's network analysis and simulation, and we do that with a number of clients around the world, central banks, financial market infrastructures, challenger FMIs like Anonymity, and other institutions, also banks. And the reason we are running this CBDC series is, first of all, of course, we are very embedded in the world of payments, have been so for a long time already in payment analytics. And we recently developed a payment systems CBDC simulator. If you go to the next slide. Which was the topic of the last month's, the first CBDC broadcast. So the simulator allows banks to understand the impact of the CBDC on their balance sheet, understand the economic impacts and the behavioral changes of consumers, perhaps, helps the central banks understand the macroeconomic impacts, move a little bit from a qualitative analysis of CBDCs into a more quantitative analysis, understanding what are the magnitudes of these impacts if you bring a CBDC to an economy. So that is what we're doing with this work on the CBDC simulator. There's also an academic paper that I think we'll maybe put as a comment into the chat if you're interested in digging deeper into this CBDC simulator work that we're doing, or then watch the previous episode, or just get in touch with us. But without taking too much time, maybe we move on to the next slide, and I'll introduce our prominent guests. First of all, we have Jean-Michel Godeffroy, who I know over 20 years. Jean-Michel was the Director General of the DG Payment Systems at the European Central Bank when I studied there in the year 2000. So he's a very senior figure in the space. He was also leading the development of the Target 2 securities. It's one of the most largest new FMIs that have been built, and also generally some very knowledgeable about money and payments. So I will be very excited to hear his views on what issues matter today on the central bank digital currencies. And the second speaker we have today is Keith Bear. He's a fellow at the Cambridge Center for Alternative Finance. I don't know Keith as long as Jean-Michel, but I know the Cambridge Center for Alternative Finance already a little bit, which I see as a leader emerging as a leader in thinking on CBDCs, on subtech, in technology related to regulation, all the things that we at FNA also care a lot about. Keith is also a member of the Bank of England CBDC Technology Forum. So I think I will be hearing a little bit today about that program and comments on his views on what is happening in UK, and I also understand a little bit what is happening in China. So very excited to hear those, and I think I'll just leave the floor to Jean-Michel to kick off. Please put questions already as we go, and then we will kind of collect them at the end, and I'll be picking up questions for the speakers today. Jean-Michel, you're on mute.
Sorry. Good afternoon, good evening, good morning, perhaps. I'm glad to be here today to speak about CBDC. It's so big an issue that I have to concentrate on some issues, and I concentrated on the policy issues, and even concentrating on policy issues, I will only concentrate on some of them. So the first question I would like to deal with in the next slide is the difference between wholesale CBDC and retail CBDC. There are a lot of mix about this. There is one thing in common between wholesale and retail CBDC, and it's probably the only thing in common. It's the fact that they are central bank liabilities. But wholesale CBDC is not a new kind of money. It's a new way of using bank reserves. And the new way of using bank reserves, thanks to DLT. While retail CBDC is a new form of money which does not exist today, a sort of equivalent, electronic equivalent to banknotes. It's a new form of money, and it is not necessarily using DLT. And in fact, most projects that you hear today, which are relating to retail CBDC, they are not DLT based. So next slide. This is the reason why, to the question, which is maybe not fundamental, but the question, are CBDCs cryptocurrencies? I would say in most cases they are not, because simply they are using the traditional technologies based on centralized ledgers. So the next question on the next slide is, okay, but in this case, does it mean that CBDC holders will hold an account at the central bank? And here too, it's important to make a difference between having an asset which is a liability of the central bank and having an account with the central bank. I'd like to make an image about securities. When you have a bond issued by Coca-Cola, for example, you have an asset which is a liability of Coca-Cola, but you don't have an account with Coca-Cola. And next slide, it will be the case for most for CBDC, because basically no central bank that I know have the intention to hold direct accounts directly interfacing the customer. Basically, what will happen is that the CBDC accounts will be managed by financial institutions, which will be regulated, and but they will not be handled. The accounts will not be handled by the central banks directly. So if we go to the next slide, The next question is, why do central banks envisage to issue CBDC? Here, I would say there are two traditional answers, which you hear very often, which are not wrong, but which are insufficient. The first answer you hear is that in mature economies, central banks want to issue CBDC because cash is notes and coins are progressively disappearing and they need to be replaced. And in developing countries, CBDC should be issued to facilitate financial inclusion. The problem with these two arguments is that they are insufficient because basically you have alternatives to cash in mature economies, in particular card payments, instant payments, and so on. And in developing countries, you have huge progress which have been made recently through mobile money in Africa, for example, or branchless banking in South Asia. So that is not sufficient to explain why central bank envisage to issue CBDC. The real argument, and that's on the next slide, is wider. I think it's basically central bank consider that the issuance of retail electronic central bank money is necessary in order to avoid that money is entirely privatized. And the reason why they don't want money to be entirely privatized is because they want to be sure that there is a possibility for central banks to enforce public policies in the field of payments. It is the only simple and comprehensive reason I can find to the fact that central banks envisage, and more, when I say envisage, they are more and more serious about moving in that direction. So next slide, I give more arguments on the reasons why central banks envisage that bank money is not sufficient for replacing cash, why there need to be central bank money available on the retail economy in parallel to bank money. And in the next slide, I explain the same thing with non-bank money, new form of monies like e-money, mobile money, stable coins. I have no time to go in detail today, but you can come back to that in the discussion, or you can also contact me if you have a doubt. So next slide, an important point is anonymity. Anonymity is not an issue. The beauty of retail CBDC is that it can be the cursor between full anonymity and full disclosure can be put anywhere in between. And in particular, I mean, the model which seems to be going to be followed rather widely is a model where there will be full anonymity for very small transactions, which will be a little bit like banknotes today, notes and coins today. And for larger transactions, they will be recorded as the bank money transactions are today, and possibly disclosed to authorities under a court order, for example. So anonymity, in terms of anonymity, CBDC is really bringing something to society, clearly. Next slide. I will not discuss monetary policy because I tried this morning and it leads too long, but we can discuss that if you wish later. But basically my message here is that there is no significant impact on monetary policy which can be expected, at least in the short run. Next slide. Financial stability is an issue, and this is one of the major reasons why central banks hesitate. And basically, I would put it this way. With the issuance of retail CBDC, you are not sure that retail CBDC, the electronic cash to some extent, will simply replace cash. It can also replace deposit money at the bank. So basically, it can be seen as moving parts of the deposits for the balance sheets of the banks to the balance sheet of the central banks, leaving a refinancing problem on the bank's balance sheets. And if there is more, if it's more costly for the banks to refinance themselves, then it means that they may lend less to society or at a higher cost. And of course, this is a major issue. And next slide, please. That could be avoided. And the central banks are convinced that that can be avoided, but it will not be an easy task. It can be avoided because if CBDC is one way or another, and I don't want to go into details, but one way or another, restricted to means of payment more than store of value. You know that these are two of the three functions of money, and the store of value is what involves most, let's say, the most important amounts of money. And what is important is to minimize the amount of money which is shifted from the bank's balance sheets to the central bank balance sheet. And in doing that, you will, for example, limit the number of payments or limit the amount of payments which can be made through CBDC. Next slide, and that will be the last issue I want to raise, because it's an issue which in my mind has received no real answer so far. It is how to attract payment users. Because fundamentally, central bank money, CBDC, is better than bank money. Because the credit value of a central bank is better than the credit value of a bank. I will not elaborate on that. Maybe you're familiar with this. And basically, if they have the choice, users should prefer to use central bank money rather than bank money. The problem is that, especially in mature economies, we have deposit insurance, which means that even if central bank money is better than bank money is protected by deposit insurance. So how will users make the difference between the two forms of money? So to be able to be attractive, central bank money should be even more interesting to hold for users than bank money. Why even more? Because you tend to use what you have, and if you are happy with what you have, and usually users are happy with bank money, why do you switch to central bank money? So this is a major issue. And the next slide, there is no hope so far that banks help. Because let's say, from the bank's perspective, today the banks are handling your accounts, your payment accounts, based on bank money. Tomorrow, to some extent, not completely, but to some extent, they may hold payments accounts in central bank money on your behalf. But what is the difference? What is the difference between the two? On the side of bank money, the banks have also the possibility to create the money and earn the seigniorage, which is linked to that. While on the side of central bank money, they don't have this possibility. So in other hand, the difficulty will be how to convince the banking sector to help the central bank to, let's say, facilitate the use of CBDC. And my answer is that probably, in contrary to what apparently the IMF is saying, but probably the central banks will have to think about leaving part of the seigniorage to the banking sector. Okay, I stop here because we don't have so much time.
I think that was excellent and very clear. Before going to the Q&A, I think we'll have first Keith do his talk, and then we'll start the Q&A.
Great, thank you. So if we could move to the next slide. And thank you for the invitation to speak to you. Jean-Michel obviously gave a very comprehensive perspective on CBDC. What I'd like to do is pick up on 5 of the points that he made and just add some additional commentary based on both the Bank of England's perspective. As Mika mentioned, I'm on the Bank of England's technology forum for CBDC, but obviously I can't speak on the behalf of the bank, it goes without saying. And I'll also be using China as an example to make some additional comments, as it's obviously a very advanced deployment of CBDC. So first off, I'll be talking about the question of technology, and retail CBDs may not be cryptocurrencies, as Jean-Michel said, but should be blockchain technology. Is it required for CBDC? So if we just move to the next slide, please. So there are many CBDC pilots and POCs, etc., taking place at the moment. I just chose some to illustrate the point. So on the left-hand side, I'll mention China a little later, but the electronic yuan, which, as far as I'm aware, isn't using blockchain or DLT, as Jean-Michel said earlier. However, there are several deployments which are using blockchain technology, notably Dcash, which is the ECCB, the Eastern Caribbean Central Bank's implementation. And I think that's a very nice strap line as to the question of adoption, picking up on what Jean-Michel finished on. In the Eastern Caribbean, at least, it's being portrayed to the general population as being safer, central bank money, faster and cheaper. So not a bad one-line strap value proposition as to why a retail CBDC is promising. The eNaira, which is the Nigerian CBDC. So both of these are in production at the moment and both use blockchain technology. In fact, they're both working with BIT as the technology provider, which uses Hyperledger Fabric, for those of you that know enterprise blockchain. And then another example is the e-krona in Sweden, the Riksbank, which again is using, in this case, an enterprise blockchain technology, R3's Corda, though that's not in production, still in a long-running pilot. And then at the top, the Bitcoin, or the Bank of England's potential CBDC, though obviously no decision taken yet, where there isn't any view yet as to whether blockchain is an appropriate technology or not. The debate and discussion is still very much in terms of the functional and non-functional requirements to work out exactly what is the right technology choice to be able to make. So I think we have examples across all three elements of the diagram that I'm showing here. If we move on to the next slide. Jean-Michel also mentioned about most CBDC implementations are taking this two-tier approach. This is from the Bank of England, and it's no different in that respect. So the perspective being proposed by the bank at the moment, should a CBDC be implemented, as having a central bank core ledger operated on by the Bank of England at the top, a very full set of APIs to give access to that to the next layer down, who are the payment interface providers, or PIPs as the bank are calling them. And these will be authorized and regulated firms, presumably including all the commercial banks and potentially other entities that might have access to CBDC. They provide the wallet technology potentially, and the means of access to CBDC to the users at the lower level, be they retail users or business users in that respect. And again, this is pretty typical of what's being deployed in most of the CBDC implementations around the world. I think this two-tier model. If we move on to the next slide, please. So the third topic, just to finish off on the bank, it's worthwhile, I think, just looking at the bank's perspectives of what the key design characteristics should be for a retail CBDC. And as you can see, these three major headings: reliability and resilience, obviously super important as for a major means of payment within the country. Questions of scalability, security, privacy, etc., as we touched on earlier. Being able to have a fast turnaround in terms of how payments are made, being able to be user-friendly and transparent, to again facilitate the adoption point we talked about earlier, and then being open to competition to be able to facilitate innovation and new ideas, new ways of doing things, so creating a platform for innovation, which is a key element, I think, in terms of being able to facilitate, which for many central banks is very important, a digital economy. We see more and more growth in the crypto asset world, in DeFi, etc. So having digital money issued by the central bank in the form of CBDC, which can provide that kind of open but regulated environment, is super important, I think. So we move on to the next slide. So another topic that Jean-Michel mentioned was this question of private money. And if we just move to the click again, we should hopefully build the slide. So we're talking about CBDC at the top. In terms of base money, if you like. If we click the slide again, sorry, it's a build up. Finality is an example that I think was on Jean-Michel. Oh no, it was actually on Miko's slides earlier as a FNA client. So that's an example of being used in the wholesale context to provide the cash leg of transactions in central bank accounts held by the commercial banks. If we move on to the next click. We then have bank-based stablecoins, and that's worth mentioning, I think, because of the growth that we're seeing. Many of you will be familiar with Libra, initially announced by Facebook, then called DM, and now the assets from the whole DM Libra developments have been acquired by Silvergate, digital asset bank in the US. So it's going to be very interesting to see how the code and the assets, people that are transferred over to Silvergate are now going to appear in the private money world, as it's a bank, regulated bank. Also Signet, which is a stable coin issued by Signature Bank in the US, and of course JP Morgan coin, which is expanding significantly at the moment. I think the Central Bank of Bahrain, for example, is working with the JP Morgan coin as well at the moment. And if we click again, just next layer down, and again, thank you. In terms of the securities world, we have the fiat-backed stablecoins, so USDC, Tether, Paxos, for example. If you click again, we then get the crypto collateralized stablecoins, DAI, for example, part of the MakerDAO DeFi protocol. And if you click again, we have the algorithmic managed stablecoins, which are priced based on supply and demand kind of models. My point being, there's an awful lot of complexity out there in terms of private money issuance, be it the innovations that are taking within the banking sector, like JP Morgan, as well as within the rapid growth that we've seen. I'll show that on the next slide. For fiat-backed stablecoins such as USDC and Tether. And if you click again, please. This gives an illustration of the growth of stablecoin supply across the major providers, major issuers, from the time that Facebook announced Libra originally in between 2019 and 2020. And as you can see, up to, at the time of this chart, up to 2022, 150 billion in terms of market cap, in terms of the total supply of stablecoins. So it's a huge momentous growth that has taken place over the last 2 years. It's obviously caused a lot of focus and discussion amongst the regulators. And it's another illustration, I think, of what Jean-Michel was saying in terms of the need for the central banks to be able to provide a regulated and available central bank money alternative in that respect, or a complementary approach in that respect. If we move on to the next slide. Jean-Michel also mentioned privacy and anonymity, or in particular anonymity. This slide is from the Bank of England. I should say these Bank of England slides are all in the public domain. You'll find them on the bank's public website. And in the technology forum, we're certainly discussing not only privacy, but the questions of privacy versus anonymity. So for example, privacy being who I am, anonymity being what I do, and the confidentiality around that. It's a big talking point. It has a significant impact in terms of for example, being able to provide for AML and CFT obligations that are a fundamental requirement for a CBDC design, but also questions of adoption will be predicated by the approach that's taken from a privacy and a confidentiality point of view. And I think the surveys that are taking place both in the UK and in the EU with the digital euro highlight this whole question of privacy and confidentiality as one of the key considerations amongst the broader consumer base, and the impact that will have as far as adoption is concerned. If we move on to the next slide, this is from the PBOC, so apologize for the quality of the slide itself, but I think it's really interesting. The PBOC Electronic Yuan pilot, still not in full implementation, but as many of you know, it's being used actively within the Beijing Winter Olympics at the moment. So how this is being deployed, I think, is quite interesting to pick up on some of the points Jean-Michel said. So there's basically 4 categories of use, which are basically classified by KYC levels. And on the right-hand side, the lowest category, which is essentially anonymous. All the user has to provide is a mobile phone number. There's no need for a bank account in that respect. But within that, there's a wallet cap of 2,000 renminbi, so I think about $300 US, and a holding a maximum balance, as you can see, of 10,000 renminbi. So at the low levels of transaction value or holding, there's the minimum level of KYC available. Then as you move all the way up, if you go up to category 1, where you need to have a mobile number, you need a valid ID, you need to have linked your CBDC wallet to a bank account. You have, in this case, you also need to have visited a bank branch, interestingly. But if you do that and you have the highest quality or effectiveness of KYC assessments, then actually you have, in the Chinese implementation, an unlimited capacity in terms of both balance and transaction value. Now that I think is pretty different to a lot of the deployments that are taking place for reasons of concern on the impact on commercial banks, for instance. I think the digital euro was mooting whether there should be a holding cap at 3,000 euros or something of that order. So to see unlimited as a kind of a proposition as far as retail CBDC is really interesting, I think. And as you can see, having this quite sophisticated model in terms of KYC categories. If we move on to the next slide, apologies if I'm moving a bit fast, but there's a few points I wanted to make. The last points I wanted to pick up on was adoption, which is, I agree very much with Jean-Michel, that's a key question. And as a pointer, I think it's quite interesting to see this analysis came from Goldman Sachs of the electronic yuan, which is drawing the difference between the fintech digital wallets. So here we're talking about Alipay, WeChat Pay, etc., and DCEP, which was the name at the time of the electronic yuan. And as you can see, there's quite significant, well, first off, it should be bear in mind that 80% of mobile payments within China go through Alipay and WeChat Pay. There's a huge percentage of retail payment traffic through those platforms. So to see what the differences is with the retail CBDC is quite interesting, I think, as you can see in terms of anonymity for small transaction amounts, as I covered on the previous slide, ability to support offline payments, which I'll come on to in my closing comments, interconnectivity with other different accounts, programmability, and fee structure. So whilst they have huge take-up, the Alipays of this world, they do charge a fee, whereas as it's been implemented, the electronic yuan has no fees being charged in that respect. So whatever the choices are being made for any CBDC implementation, including this kind of comparison with existing fintech or techfin in the case of China, digital wallets, for instance, then there are means of being able to create attractiveness within the retail CBDC to help that question of adoption. And if we move on to the, I think my last slide, just additional considerations, I think, as we talk about CBDCs. First one is offline payments, as on the top left, which I touched on before. So in the case of China, you're able to touch phones and make an offline payment in that regard. Second question, a big topic, again, these two slides on the right from the Bank of England, questions of programmability. So how would you want to use programmability, which is a way that could be used in a blockchain deployment, for example, of a CBDC. That has big consequences or big implications. So, for example, being able to make VAT payments at the time of the transaction itself rather than subsequent payments. So it has big implications in terms of having much more reducing friction in terms of tax payments and all sorts of walks of life in terms of where programmable money can make a significant difference. Bottom right, the big debate again about account-based systems versus token-based systems, which is the right approach to take. I won't dwell on the details of the two, but obviously that's another major design consideration. And then more broadly, there's I think the question of, especially in the case of the electronic yuan, what is the geopolitical, the more global economic kind of considerations to take in place? The electronic yuan has obviously been progressing on a retail and small business, larger corporates using it across the Chinese economy, the domestic economy. But just very recently, and you can see this news item was January this year, where it's beginning to show its face in terms of more international usage. So in this case, being used in Shenzhen for supply chain finance settlement. And I think with One Belt, One Road, et cetera, there's going to be a significant increase in the more international perspectives of electronic yuan and the implication that might have. And again, that's obviously a consideration for the EU, for US, UK, et cetera, given the way of the world at the moment. So I'll pause there. I think that was largely what I wanted to cover, and hand back over to Kimo in terms of facilitating the next stage.
Thanks a lot, Keith. That was excellent. Also very clear and interesting. So there are loads of questions that probably we won't be able to cover all of them, but I tried to pick up maybe some of the more general ones and maybe group them a little bit together. So I think the first one is from Victoria. If central banks have to work hard to convince people to use CBDC, is retail CBDC a solution looking for a problem? And in a similar sort of fashion, there's another one. A mention was made by Mr. Godeffroy on the CBDC modifiers mentioned and hinted at the real reason being regaining monetary sovereignty. In your opinion, what should be the true criteria that should be used to determine CBDCs in developing economies despite growing advancement in their payment systems? I think these have been in a way similar, at least in my mind. I see that there is a push of CBDCs where the motivators are sovereignty, soft power, national security, monetary policy, confidence in the currency, financial stability issues, like I think I mentioned somewhere in the chats as well, related to cryptocurrencies. And then there are pull things. So how do we get people to adapt them with a better privacy for online transactions and so forth? But I would also like to hear what your views are, Jean-Michel, Keith, which one want to pick this up?
And if I just make a quick comment on Victoria's question, because that exact same phrase, the CBDC, a solution looking for a problem, was used at the House of Lords hearing in the UK. Some of you may be familiar with that, where they reviewed the case for CBDC as far as the UK was concerned, and came out with the view that CBDC was in fact a solution looking for a problem. So not necessarily as enthusiastic for CBDCs as others within the UK are. So I mean, it's a fair point, I think. I mean, I think from a personal point of view, I was quite disappointed by the House of Lords perspectives on this. I think they're missing some major points, including the points we discussed earlier in terms of providing an alternative to private money solutions, being able to facilitate a digital economy, being able to understand how central bank money can play a bigger role, and particularly given the decline of cash usage that has taken place in major economies over recent years, accelerated by COVID, of course. So I think that's an interesting point, a good question, and it's illustrative of the debate that is going on at the moment in many countries, I think, in terms of CBDC deployments.
Yeah, from my perspective, I think that, as I have explained in my presentation, I think we have efficient solutions today which are provided by private money. And I can fully understand, and typically the banks are answering this way, say that we are providing an alternative to cash. So we are providing efficient card system, we are providing efficient instant payment solutions. And why do you, central bank, want to implement a new kind of money? And I think fundamentally, the reason why many central banks, not necessarily all, but many central banks are considering the idea is that they say, I mean, if money is entirely privatized, especially in the new environment, which is global, which is with big tech taking a lot of importance, are we, as a public authority, because central banks are public authorities, are we going to be able to implement payments policies which are for the best interest of society? And you may have some central bankers who say, yes, I trust that we central banks, we have other means to impose solutions to the private sector. And there are other reasons, those who are other central banks who are saying, well, we are not sure we will always be able to do that. Up to now, we had the notes and coins. They are going to disappear one day, not very quickly, but they are going to disappear. And in some countries, they have already faded away to a large extent. And are we going to be still able to implement a policy which is for the good of society in terms of competition, in terms of financial inclusion, and so on? And many central banks say, no, we are not sure we will be able to do that in the new environment which is developing outside of our reach. And this is the reason why central banks are looking at CBDC. You may say they are looking for I can understand that some actors, in particular the banking sector, they have clearly an answer against CBDC, because CBDC is to some extent a lack of trust to bank money. And I can understand that bankers are usually not so favorable to CBDC. Okay, I stop here.
Good. Okay, the next one from Massimo Pisaroni. So recently the MAS, that's the Monetary Authority of Singapore governor, has raised doubts on the real utility of a CBDC, considering the pros and cons. Could we so assume that this path should not be taken for granted? So ECB, I think there's a two-year timeline now to make a decision. I think the Bank of England is also on some sort of timeline to make the decision. But what's the likelihood that this decision will be not to go with it? you have views?
I mean, just to give my view, I think the longer it takes, the more likely it becomes, because the longer it takes, the decline of cash usage, as Jean-Michel mentioned, and the growth of stablecoins and, for example, DeFi, etc., will cause it to become even more of a necessity. But by no means is it a certainty in either way, and there are arguments in both camps. So it is a complex decision, and I think that's one of the reasons why most of the central banks are taking this steady and slow approach, being very consultative, both in terms of surveying consumer perspectives, the kind of various fora that exist for getting views from industry, from academia, from the existing payment providers, from other state actors, etc., to understand what the right decision is going to be. So in my view, by no means is it certain, but I think the longer it takes, the more likely it becomes.
I have the experience of working as a central banker for many years. And what I would like to say is that central banks do not take this kind of revolution in one step. They take their time. They study the matter, and they do not announce suddenly that they are going to take a major decision, which has a lot of implication, including and in particular on the banking sector. So my conviction is that unless something new in the debate appears, central banks are progressively going to move towards the issuance of CBDC. On which conditions, which limits, and so on, all this is debatable. But unless, again, they find a showstopper, which has not been identified so far, I would be surprised if central banks or the major central banks were to say one day, okay, we have studied that for 2, 3, 4, 5 years. We have spent a lot of money preparing for this or investigating about it. And then, no, finally, we come to the conclusion that we don't need to issue it. I mean, again, unless something happens, which I do not see on the horizon, my conviction is that central banks are going to move ahead, including the biggest central banks. And again, just to be clear, central banks are repeating, we don't want to replace banknotes. Banknotes will be issued and offered as with all the quality needed until people request for it. The central banks are preparing for a situation where the banknotes are fading away, and they want to be able to have a replacement, but that may also take a number of years. There is no urgency. It's not a crisis situation where central banks are to react very quickly. That can take time. That's why they take their time, because there are a number of issues to solve, including the acceptability of CBDC, the impact on the banking system. Maybe also because I tend to think that it is not a major issue, but there is still this technical issue: should we use DLT or not? I mean, it's a question that there is no easy answer to that. To the question, should we issue CBDC? I'm sure central banks are more and more convinced that they will. How is still to be debatable.
Yeah, I think also the train has left the station, and now it's slowly gathering steam. I think that's a view I also have on it. There's a question by Mark Sayel. If CBDC is a defensive ploy against new kind of privatized money, can they not be regulated out of the retail space to stop these unwanted developments? And I think this is also perhaps a reference to the President's Working Group on in the US on stablecoins, which said that the stablecoins should be considered to be financial market infrastructures, and there was a lot of other sort of regulations that they in a way foresaw for stablecoins. So, what's your view on this?
I think we have to be to understand that there is another dimension in the new developments concerning money, and Libra has been has made the eyes of the central banks wide open. They say basically what may happen is that a big private company not even based in my country, will be able to determine the terms of making payments in my country. And I've not said the word, but somebody did it. The question of sovereignty is critical in this matter, because you have to understand that the central banks, they represent the possibility for the public authority in the country to implement a policy on payments. And Libra has created fear, in my mind, excessive fears, let's be clear. But nevertheless, for many central banks, they have triggered the fear that they may lose control on their own currency. And that has happened even for the US authorities. In particular, if Libra had been with a reserve of currencies, which would be in several currencies and not just in dollar. That's the reason why the US authorities wanted first the Libra to be fully in dollar and not in different, in a panel of currencies. So this question of sovereignty have to be kept in mind to understand why central banks are looking at CBDC.
And just to add a comment on Mark's question, whilst the direction appears to be that stablecoins will be regulated, President's Working Group, etc., as Kimo mentions, that doesn't necessarily mean they will disappear. So I think USDC, for example, has been welcoming the migration towards more of a regulated environment for stablecoins. Obviously, they may have a significant impact on other issuers that aren't able to comply and get regulated as easily. So it may change the shape of the stablecoin market, but I don't think it will eliminate it. So I think what the risks may change, but they don't disappear, and therefore, that will still be a significant factor, I think, in terms of the arguments for a CBDC.
Thanks, very good. There's a bunch of questions related to the adoption and value add of CBDCs. So Javier, what is the added value of central bank backing for everyday payments? How could the PBOC allow the use of smart contracts without using the blockchain? Is there any incentive actions to do by central banks and or by the government for the adoption of retail CBDC by citizens? I think this is an important question is around the adoption, but I think also around the difficulty of foreseeing how the new world would actually look like, and what kind of new opportunities it gives to the banks to provide new services, what kind of new opportunities that it gives to the government around welfare payments, around like programmable money, around these types of sort of questions. I think those are, we don't really understand those things yet, and I think they're super important to envision and talk about. What do you think about this adoption and these sort of new types of ways that we can use money? I think one example was recently, for example, foreign aid. So now it goes maybe not to the intended recipients. Maybe with CBDC it could be better targeted, or welfare payments or others. Any views you have on this type of adoption and new services topic?
I think that's very true. And in fact, we're doing a project with the World Food Programme within the United Nations in terms of how, in fact, crypto assets rather than CBDCs could be used as a means of being able to get payment necessary for food provision in the hands of those that need it without suffering all the challenges in the supply chain to do that with normal regular cash. But I think on adoption, the broader question is twofold. One is looking at where innovation is happening within the payments landscape at the moment and being able to help and facilitate that. And that is a question of integration. How can different kinds of innovative payment providers have access to CBDC? Do they become PIPs in the context of the Bank of England's deployment, for instance? And then secondly, to what extent the CBDC platform can be used to facilitate innovation in of itself. So for example, programmability we've touched on, but there's a question of whether the programmability is just at the central bank's level, at the commercial bank level, or at corporates, for instance. So who has the right to be able to write programs and to deploy programmable money in certain ways, and to what extent that can facilitate innovation. So that's one example, I think, of the technology obviously provides many opportunities in terms of how innovation can be deployed. We by no means do I think we've worked all what all those may be yet, but I think as a platform for innovation that will drive adoption strategically as CBDC progression happens in that respect.
I think there is a debate on whether money should be programmable or not. I mean, when I say there is a debate, it doesn't mean that they should not be, but at least there is a debate, should it be? And of course, that has an implication on the link with DLT or not. And I would not go too far in that direction. I would say this is showing that there is still a lot to debate on CBDC. But I know there is one point on which Keith and me agree completely, because we have discussed that before, is that the big problem with CBDC today is how are you going to convince the people to adopt CBDC once you issue it? If you issue it, if and when you issue CBDC, how are you going to convince people to adopt CBDC? And that means, how are you going to convince intermediaries to help you, giving the incentive for the people, to the general public, to adopt CBDC? And to this question, I must say, so far, I have not seen any convincing answer. But of course, this is perhaps the last question you want to ask. I don't know. But at least this question is still to be answered before at least the major central banks in the developed world are issuing CBDC. You cannot issue CBDC and suddenly discover that nobody is using it. So you have to do something in advance.
Very good. I think that was the last question that we were going to ask today. I think it's actually more complex even than that, because then you need to think how the competition is going to react to maybe, like, for example, the central bank digital currency have better privacy than the current payment instruments. But the payment instruments are going to react and probably provide better privacy in order to compete in the environment. So you're not in a vacuum when you have competition. Excellent. I think it's super interesting to see all the questions. We won't be able to answer them or discuss them more today because we want to wrap up sharp at the hour. If you have any more questions, please get in touch with us, with Will or Carlos, who is on the panel here too. And happy to talk more about the work that we do on the CBDC simulation. I'm also sure that if you're going to reach the speakers today still on something, they'll be happy to do that. Yeah, you'll be receiving the slides, access to the previous CBDC broadcasts, and like Will said, the next one will be HSBC and IBM on their project. And after that, I think we have hopefully we will have more people from the actual countries that have set up CBDCs to tell about their experiences. So hope to see you soon again. Thanks.
Thank you.
Thank you very much.
Thanks for the speakers. Very much. Excellent discussion too.
Thank you.